This cycle has been completely different because it's been dominated by institutions, right? That's what we did here. So we extracted global growth pricing by Bitcoin and compared it with like leading macro indicators like ISM new orders inventories, like Bloomberg Economic Surprise Index, global Centix expectations, and so on. The model implied fair value for gold is essentially 75% lower.
And so for me, I think those two combined make 2020 a really good case for 2026. Something I've been saying for months now is that we have not been in a bull market, for Bitcoin at least.
Right. I think IBIT's cost basis is around 80K or 81K. Across all US spot Bitcoin ETFs, it's around 80K.
Guys, happy Wednesday. Today we have Andre, which is head of European research for Bitwise. Welcome to the madness, my friend.
Thank you so much. Thank you for the invitation, Maurizio.
It's a pleasure. Smithy, how are you doing today?
I'm doing great. I'm a little confused about what the market's trying to tell us right now. So I'm really excited to bring on Andre today.
Yeah, likewise. Thank you so much for joining. Guys, you know the drill. In the description, you'll find all the links, so make sure to go and follow Andre and Smithy, of course. But yeah, as a ritual, we can quickly jump into our non-trading trading channel. As you guys know, we don't do any trading here, but we like to observe the monthly candle. And hey, we are back into the channel. So like you said, Smithy, I'm also a bit confused. I'm not going to jinx it. I'm not going to complain. I'll take $92,000 Bitcoin. So
we're so back, right?
Exactly.
We're so back.
Guys, exciting news. December 8th and 9th, I will be attending the Bitcoin conference in Abu Dhabi. If you're coming, please stop me, say hello, let's connect in real life. In the box down below, you'll find a 10% voucher. Use it, get your ticket before it's too late. By the way, if you're enjoying my content, it will mean a lot if you could help me by subscribing to the channel and push the like button to support my journey. Thank you. Fear and greed is an interesting number, 28, so going up a little bit. We've seen worse. We've seen 15 last week. Still nuts to me that Bitcoin is trading over $90,000 and people are in fear. Big mystery right there. And of course, December so far, which is only a couple of days, but positive with a nice 0.29%. Have you done one of those charts you do, Smithy, on December yet, or you're going to pull it out in the middle of the month?
I can bring it back by popular demand if needed. People have been a little bit sobered by the fact that we had two pretty bad months, some of the worst months, or two of the worst years for October, November ever. I'm definitely happy to bring it back if it's helpful. I think people are more used to this monthly chart, but I like to track. I don't know if you know what he's talking about, Andre, but I track day to day kind of throughout the monthly return.
That year was a pretty big outlier, especially like Q4 was such a big outlier. I mean, starting in September, September was unexpectedly strong, right? More than like average. Like it tends to be a negative month. October was unexpectedly weak. November was also unexpectedly weak. And now December, it tends to be a positive month. But I think the more important outcome will it be like a positive year, right? Will it be a green dot again? Or will we break this kind of pattern, right? Of like 3 green dots and 1 red dot.
Absolutely. Yeah. I think that chart, just to say one more thing about it, the chart that we always refer to, this channel, it'd be interesting, first of all, Mauricio, to overlay the original channel that we had weeks ago. Just see, then and now. I was tracking this for months and months, looking at the standard deviation, things like that. We broke straight through the floor of it. It was looking like it could just do that forever, that crab crawl. It still kind of is. I know you look at the macro, but looking at it through a pure price lens, Andre, this accumulation phase has been very different from past years. So if we end up closing out the year a little bit down and we have another red dot, it wouldn't surprise me too much. But I think that I just made a post yesterday. I think we are either going to see a move up or we're going to see a move down, which sounds like the most simplistic thing you could possibly say. But it seems like there's either a structural change here and we're going to get pushed to another new all-time high, the same way we've done 3 or 4 times here. Or it seems like we're going to take a dive and then kind of lay low for the next 6 months to a year, who knows? And then we'll have like a huge rally once liquidity actually comes back in, et cetera. But right now we're seeing actually a tightening of liquidity. So
I agree. Like this cycle has been completely different because it's been dominated by institutions, right? Previous cycles have probably been dominated by the halving effect, right? The halving supply deficit, but like institutional demand this year via corporate treasury companies, Bitcoin treasury companies, and Bitcoin ETFs has been like orders of magnitude bigger. It's been, I think, 7 times bigger than the supply deficit induced by the halving. We're close to, I think, 1 million Bitcoins being bought in 2025. It's like even higher than last year, being bought by like both treasury companies and Bitcoin ETPs globally. So that cycle has definitely been different in that sense. I think what has actually caused this latest bull market correction, in my view, it's still like an interim bull market correction. It's not like the start of the bear market. But I think what has caused this latest bull market correction is essentially long-term holder distribution, right? We've seen like a crazy amount of long-term holder distribution. We've seen especially like older coins coming to the market. I think Coindays Destroyed has like 90-day rolling. Coindays Destroyed has reached a new, or is close to new all-time highs. So very old coins have hit the market, and that has essentially caused this kind of correction. So this long-term holder distribution was also exacerbated by panic selling of short-term holders, right? So a kind of long-term holder distribution morphed into short-term holder panic selling, right? So realized losses spiked, right? I think short-term holder realized losses spiked to the highest level ever recorded. Some people might say it's largely due, or somewhat due, to this kind of Coinbase reshuffling we've just seen, which has like a significant effect on all these short-term holder metrics. But I think there's been like significant pain among short-term holders during this latest bull market correction, which is why I think we've probably seen the bottom already.
I don't know if you guys can see it, but I literally overlaid in yellow. I don't know if it's clear, but we had the older channel, which was the one in red. And then what we did, we literally expanded, because I don't think I was tracking it correctly, because now you can see all the bottoms candles are in the same line. So
my bull thesis is not so much based on chain. It's more based on macro, because two things. So I think from a macro point of view, I think Bitcoin's already pricing in a recession. So if you believe like Bitcoin's like the canary in the macro coal mine, and there's like bad news coming because Bitcoin has just nosedived 35%, which is usually true, right? We've seen it in previous like bull market tops, right? Bitcoin nosedived first, and then stocks came later, right? S&P 500 nosedived afterward. And so it's probably somewhat true. And we've seen like significant weakness in AI stocks. We've seen significant weakness in Oracle, or like names like Nvidia even, right? They've been down like, even like, I think Oracle's been down like more than 40%, right? So there's been like a significant drawdown in TradFi as well. And Bitcoin has probably foretold this kind of correction. But that being said, even if you believe like Bitcoin's the canary in the macro coal mine, it's already pricing in a recession. So that means there's a lot of bad news already discounted in the price, right? So you can see what we did here is you can actually extract what Bitcoin is pricing in terms of global growth expectations. You can do this via like what is called a principal component analysis. That's what we did here. So we extracted global growth pricing by Bitcoin and compared it with like leading macro indicators like ISM new orders inventories, like Bloomberg Economic Surprise Index, global Centix expectations, and so on, right? And what it's telling you, even if you have like a deceleration in growth, it's already being priced in by Bitcoin. The mispricing to the downside is as strong as during the 2022 FTX blow up, right, where we had this like significant tightening by the Fed, where we had this yield curve inversion and so on, right, money supply contraction, like, and even it's comparable to the COVID crash, right? We have such a significant downside or pessimistic pricing by Bitcoin. I think it's so asymmetric already in terms of like what it's being priced in already. And so I think Bitcoin's undervaluing macro expectations, because like, and that's like shown on the second chart that I've shared.
Yes. This is just an amazing way to get a new perspective on the price action, right? Because we have all these different models. Not a lot of them, and you don't really know what to trust online. But you know, this is sort of a, correct me if I'm wrong, the macro indicator built into this PCA analysis. Is it still proprietary, or is it laid out explicitly in the?
I wrote a Medium article on this like in 5 years ago, but I haven't laid out like this kind of how to distill or disentangle like global growth pricing. In the first step, we actually distill macro factors from like traditional financial market prices, like equities, like bonds, FX, commodities. What is actually priced in terms of macro by like traditional financial market prices. And then in the second step, we actually look at the factor loadings, how Bitcoin is actually loading on this kind of first principle component, which usually is global growth expectations, And so it like there's some kind of interpretation involved, but like based on all kinds of correlation analysis we did as well, it correlates highly with like risk appetite and global growth expectation, like the ISM and all these indicators. That's why we also think like it's global growth expectation that is being priced by the first principle component. And then we just look at the factor loadings by Bitcoin. And so you get like a variable that is essentially saying how much is Bitcoin actually pricing in terms of global growth expectations, And that then in a third step, you compare this kind of global growth pricing by Bitcoin to like leading macro indicators,
Fantastic. Folks should definitely go back and read all of your Medium articles and your fantastic research posts. Thanks, Andre.
Thank you.
And so but this is much more underpriced relative to the macro conditions than people appreciate.
Thank you.
Is that fair to say?
But yeah, so going back to the bull thesis, why I don't think we're entering like a new bear market is essentially this chart. What we've seen over the past 12 months essentially is we've seen like the highest amount of rate cuts since subprime. So you can see here, this is like the global net amount of rate cuts minus rate hikes. But in terms of rate cuts only, we've seen like the highest amount since subprime. It's on par with like the amount of rate cuts, number of rate cuts post subprime, which is incredible, right? Because of tariff uncertainty, right? Tariff policy uncertainty, many central banks, not only the Fed, like many central banks, including like the Swiss National Bank, Bank of England, European Central Bank, all of these banks, they cut interest rates, right, this year. And so what it usually does is it extends the macro cycle, right? Because these are like long leading indicators. They lead like the usual kind of macro cycle by at least 12 months, like the ISM. They lead it by around 12 months, like more forward-looking indicators by at least 6 to 9 months. And like the black line that I've shown here is the same that I've shown in the first chart, where compared like Bitcoin's macro pricing, the number of net rate cuts across the globe suggests actually that the current upturn in the business cycle will probably extend well into 2026 or the next 12 months. Okay. Even based on very forward-looking indicators like the expectations components of the Empire State survey, right? Philly Fed survey, like they even lead like the ISM manufacturing index. That's actually my thesis. And at the same time, you have like Bitcoin pricing in recession. All like growth will likely continue to be positive or continue even to accelerate. So it's very asymmetric in my view. It's the risk rewards is so much like has actually improved so much by this latest bull market correction, right? The ISM hasn't barely moved, right? But like regional indicators, they already pointing towards like a re-acceleration, right? It doesn't look like a recession, right? It doesn't like if you look at regional indicators, if you look at other kinds of like cycle indicators.
It looks like it's been trying to run up despite the macro not being able to provide the support is what it's
exactly. And
like.
So
I've been trying to wrap my head around that. Yeah.
And so I think like growth is actually re-accelerating, will probably continue to re-accelerate well into 2026. And meanwhile, Bitcoin is pricing the recession. There's so much like mispricing going on in my view.
It's interesting you mentioned the business cycles because with Smithy and Plan C a couple of weeks ago, we discussed the option or what we believe that Bitcoin is not going to follow the 4-year cycles any longer, but more likely kind of aligning with the business cycles, which are indeed 8 years. So I agree with you. I think liquidity drives the markets. And the fact that we've seen Bitcoin, let's say, following these 4-year cycles so far, I don't think it's going to do that any longer. And any indicators you can find out there, none of them are flashing anything. We haven't even seen the banana zone, as we call it, yet.
Yes,
so
exactly.
it's very unlikely that we will.
Yeah, upside down banana zones.
Exactly.
Yeah.
But this is wonderful, man. Thank you so much for providing such a wonderful data here. This is fantastic.
Bitcoin's being like, it's mispricing the current macro outlook in my view, but it's also mispricing global money supply, right? The chart that shows like Bitcoin and global money supply is probably like the most hated chart right now, right? Because there's been such a huge divergence more recently. Like Bitcoin has diverged to the downside, right? Well, global money supply has continued to drift higher. Some analysts, like some pundits on Twitter, like they've literally been like following global money supply to the tick, right? And trying to like predict Bitcoin like on a daily basis based on global money supply, and that doesn't
Yes.
make sense, right? I mean, we
No,
can
that
agree
doesn't
that
make sense.
like,
Thank you. No.
doesn't really make sense, but like there's no like short-term relationship between Bitcoin and global money supply. It's probably more derived based on the dollar exchange rate and so on. But nonetheless, I think there's like a medium to long-term relationship between Bitcoin's price and global money supply, which you can model via co-integration, right? So that means like Bitcoin can deviate like from the path of global money supply, right? But it tends to move around like the trajectory of global money supply over the medium to long term. So that tends to be like a medium to long term correlation, but not so much like in the short term. And I think what we're seeing now is like Bitcoin is diverging to the downside, but this is also somewhat building a kind of undervaluations, building some kind of mispricing that will revert to the mean, because co-integration relationships, they're mean reverting. So like the higher the divergence in any kind of direction, to the upside or downside, the higher the probability that like price will snap back, you know. And I think that's what we're seeing. Like if you scroll down, you can also see like the difference in pricing. So what was actually global money supply, it's not financial advice, it's just like model based prediction. But global money supply right now, based on this kind of co-integration relationship, implies a Bitcoin price fair value, quote unquote, of 270,000. So this is implied by a global money supply. I mean, you can't really tell when like Bitcoin will snap back to this kind of fair value / equilibrium price, but that's at least implied by the model, you know.
I think it's hard to pin down a fair value price, quote unquote. You have the air quotes when you're looking at it, with a single factor, right? And I think that's why it's important to take the full macro view, right? Take a comprehensive, holistic look. I think it's important to take a look at the statistics as well. So I'm a big power law fan. I don't think there's any perfect body of work out there, but things like production cost and operating expenses and things like that. But these metrics that you start to derive, they're not so straightforward where you take a single metric and you say, because this is X, the fair value of Bitcoin's price is, this percent off. I think most of the analysis I see out there are pretty scant on, they're not very rigorous, I guess. They kind of like, well, like you said, the short-term correlation with the M2 or GSM. In the top list, in the top of the list of charts that drive me the craziest, that get the most attention on social media. Why is so liquidity and the Bitcoin price deviating so much? When are we going to mean revert? But to your point, it's like that's a longer time frame sort of correlation. So,
but you know what's the interesting bit here? It's not only like that Bitcoin is undershooting global money supply with respect to global money supply. Gold actually overshoots global money supply by 75%. The model implied fair value for gold is essentially 75% lower, right? For Bitcoin, it's higher, right? It's probably 66% higher from here. For gold, it's 75% lower. And if you combine this kind of insight with the relative valuation based on like the Mayer multiple, and you can compare like Bitcoin and gold based on like the percentage deviation from like the 200-day moving average, you can see like Bitcoin's relative valuation relative to gold is like at a 3-year low. It's close to like the 2022 lows, right? The FTX blow-up lows. So I think there's still this kind of case for like a rotation from gold to Bitcoin, especially if you have like a renewed increase in risk appetite because of the business cycle upturn and so on, right? Because if you go to the next chart, the relative performance between Bitcoin and gold tends to cycle with cross-asset risk appetite. Like it's essentially, so Bitcoin versus gold is essentially risk on, risk off, right? And not only is Bitcoin undervalued relative to gold, it's also oversold, right? It's been oversold by like 3 standard deviations. And so if you have like a renewed upturn in like low growth, renewed upturn in risk appetite because of this monetary easing that I've just shown, like the number of rate cuts and so on in 2026, then this kind of relative performance should change in favor of Bitcoin. It doesn't necessarily mean like that gold will crash or will significantly underperform. It will just mean that there will be a change in performance leadership. So Bitcoin will outperform again.
You know, we see the gold driving some of the difference in valuation with Bitcoin price, and you see it driving things like that copper to gold ratio. It reminded me of that. People are wondering why that's still trending down, and it's like, guys, gold's not done rallying right now apparently. And so back to your thesis, going deep into 2026, that makes it all the more plausible to me. I think what people forget is that gold sort of acts like a counter. It's another asset that when we are pricing in harder economic times, it has that same sort of FOMO snowball effect, right? Where people pile into it, it drives the price up. So gold seems quite overheated. Could it run more? Yes, but I think the difference between that and like, you know, ISM PMI, I was thinking of this the other day, is that I like the PMI, even though it's only updated, unfortunately, on a monthly basis. You're getting like direct feedback from people who are steering the ship on the operation side of businesses, right? And they're actually providing you that direct feedback to show like, you know, how slow business is, how many order intakes there are, things like this. And you don't really get it. What I like about looking at both of those is you get one of those signals is like, you get the FOMO effect. So you get a sense of like, okay, well, this is an exponential parabolic move for gold, so it's going to have to crash here at some point. But the ISM PMI is giving you a little bit more of a sober, you know, it takes the sort of FOMO out of the signal, so to speak. So it kind of gives you more of a true sense of where we are at in terms of credit and things like that, and how easy it is to do sales. And so for me, I think those two combined make 2020 a really good case for 2026, like you said.
I also think like copper gold is one of the best like TradFi risk on, risk off indicators, because copper is essentially like, it's a cyclical industrial metal, right? Base metal. It's like the most China sensitive metal you can think of. It's essentially like a barometer for Chinese growth and emerging market growth, right? And so that ratio between like copper and gold, because gold is like a safe haven risk off asset, that relative ratio is like risk on, risk off as well. So, and like it's not the case that like copper hasn't rallied, right? Or like copper has actually also rallied.
It's actually also been going. Yeah, I was going to say.
It's
right.
Exactly. It's been been overshadowed by gold. Like gold has rallied so much more, and that's why this kind of relative ratio has been trending down. But like I think the performance of gold should like normalize after this kind of excessive rally, right? Like gold is essentially outperforms only in a recession or in a kind of risk off environment. If we move away from this kind of risk off into risk on again, naturally gold shouldn't perform that well anymore. It's just like the normal pattern, right? And I also think like copper gold should like go up. So there should be like a performance leadership of copper, and especially Bitcoin, if you can consider this kind of renewed return in like risk appetite.
Yeah, exactly. I agree. Also, Smith has a good chart on copper and gold that he posted not long ago. Silver is also flying. So, like you guys are saying, you know, everything has been overshadowed by gold. And gold is the OG canary in the mine, right? So it makes sense when the markets are in fear, gold tend to rally. Like you guys have said earlier on the M2, I don't look into that because some people are looking at the 83 days, 89 days, 107 days. They have these weird offsets. So basically, they are trying to match the design of the graph, basically. So it doesn't make any sense to me. I agree with you guys. I don't look at
those are the charts that do the best. So we might have to change our strategy here, Andre.
Do you know the saying like that? Have you ever like, there's a saying, you've never seen a bad backtest, right? Because like people crunch the numbers until it works, right? But like, to be fair, I mean, I've actually done like a quantitative analysis on like the optimal lag length between global money supply and Bitcoin. on a weekly basis. And like the optimal lag is not 120 days or 90 days. It tends to be 6 weeks. Global money supply tends to lead Bitcoin by 6 weeks based on cross correlations,
That's
So
interesting.
there's some kind of lead of global money supply.
The cross correlation is a good way to do that. Lag analysis is there's 6 weeks is optimal, but how much of a range is there? Do you see? Like, is it like pretty wide? Like, in some cases, do you see it lagging by 6 months, or is it pretty tight? Do you remember?
No, it's like I think 6 weeks was the only like lag where the correlation was even significant. The rest was
Okay.
not really significant. But
Right.
yeah, I think it's somewhere around that range. It does make sense that global money supply does have like a lead, but yeah, it's not like I don't think it's like 9.
It's not like a magic wand, though. Yeah, I remember doing that, and I sort of wish I could go back and delete these posts, but I won't do it because I'm an honest analyst. But last year I was doing some cross correlation and lag analysis of just yield spread with Bitcoin kind of bull runs, and we're coming up. I think we were mid-year last year, and I was looking at it, and well, the optimal lag was about 60 days. I think it was 58, 59 days.
Corporate spreads or what kind of
High yields, the 2-year, 10-year bond.
term spreads. Yeah, term spreads.
Yeah,
Okay.
exactly. And so just looking at those peaks, it looked like about 59 days.
It does make so much sense, and it's also consistent with global money supply because the steepness of the yield curve actually highly correlates with money supply growth. So like the steeper the yield curve, the higher usually like the growth rate of M1, especially like these narrow money supply aggregates like M1 in the US. They tend to be highly correlated to the steepness of the yield curve. And it does make sense because like the yield curve is actually like the net interest margin for commercial banks. The steeper the yield curve, the more banks are incentivized to extend loans and create money because most of the money supply is actually created not by like the Fed, it's created by commercial banks, right? When they like extend a loan to businesses, individuals, especially for real estate, right? There's so much money creation involved. And so it does make total sense.
Yeah. Well, the yield spread, the 2-year, 10-year, it's not making as much headlines recently, but it sounds like something you track but I am curious. I looked at it a few weeks ago, and while it's been positive for the last couple of years, I feel like for the better part of the last year, it's been pretty stagnant. Like it kind of went positive.
Exactly.
And to your point, that slope has not been there. So do you expect that to return then? So
it implies that global money, like US money supply growth, is stagnating. That is essentially like, but it tends to lead like US money supply growth. But like what you also see is during periods of Fed rate cuts, like the steepness of the yield curve is mostly determined by the short end of the yield curve. That like the Fed, that's why the Fed essentially controls the steepness of the yield curve and money creation with interest rates changes, like Fed funds rate changes. And so the moment they continue cutting rates, that steepness should increase actually. So the yield curve and the term spread should actually widen, We talked about like macro undervaluation, right? We talked about global money supply undervaluation. Like we talked about the relative valuation between Bitcoin and gold, right? It was also like signaling undervaluation of Bitcoin, right? But even if you look at on-chain metrics like AVIV, Mayer multiple, or short-term holder MVRV, right? Like all of these metrics, I mean, especially if you compare them, like if you have a look back period over the past 2 years, like they're in like the 1 percentile, they're like super, super low, Even like if you go back 4 years, they're in like the 3 percentile or first percentile, right? Third percentile, first percentile. Especially a short-term holder MVRV implies that there's so much pain among short-term holders, right? And so I already think like there's so much value in Bitcoin already. It doesn't necessarily mean that Bitcoin can't go lower. I think there is probably even more pain, right? And it's quite likely that Bitcoin could continue to consolidate. But I think we're already approaching like deep value levels. And he talked about like energy values and like metrics like valuation metrics that you can derive based on hash rate and difficulty and so on, energy costs. I think the electricity cost, like the marginal cost of production for Bitcoin, is around 71, 72-ish K. The worst case, and usually Bitcoin has bounced off this kind of minimum threshold. Like that was usually like the max pain in any kind of bear market. But when Bitcoin reached that kind of marginal cost of production, which is also coinciding with MSTR's cost basis and the previous cycle's all-time high. So if let's assume let's assume we were in a bear market, right? We're not in a kind of bull market direction, but let's assume we were in a bear market. Then like the max pain is probably around like the previous all-time highs, which is around 73-ish K, maybe 70K, which was like the confluence of MSTR's cost basis, which is around 72K, the marginal cost of production / electricity price, electricity cost for Bitcoin, and so on. So, but like how much downside is there left? So in my view, it becomes like increasingly asymmetric.
I fully buy what you're putting out here on this, and I think this helps make sense of a lot of things, right? Because something I've been saying for months now is that we have not been in a bull market for Bitcoin, at least. Say what you will about anything else, but this doesn't. And I think it's supported by the marginal cost of production, electricity cost. The only thing I'll say about those metrics out there, just as a totally honest caveat, is I think the devil's in the details in terms of deriving those values, and I think there's a little bit of a widespread in terms of what the actual number is. It is exactly 71,000. No, it's probably somewhere between like 62,000 and 80,000. I don't know. I don't think it depends on your methodology there, but yeah, it's somewhere in there. And I totally agree that the closer we get to those values, I think that provides a pretty, what I'm calling kind of like a squishy floor. And so I think we're not that far from that if you think about it, right? I mean, we just made it back up to 93,
but that's the point. Like, and Bitcoin's already pricing the recession,
What are the few things in your mind that you've been looking at that tell you that Bitcoin has indeed been pricing in, quote unquote, the recession? Like, what are the main indicators of that's happening to you?
Like the key analysis was the very first chart, right? Comparable, like mispricing to the downside, that's comparable to both the FTX blow up and COVID, right? If you look at the residual, like the residual in the second panel below that chart is actually showing the degree of mispricing, and it's like, and Bitcoin's mispricing the current macro leading indicators, these very forward-looking leading indicators by the most since 2020, 2022. So I think there's already a lot of bad news discounted in the price of Bitcoin. But if you look at where could Bitcoin possibly find support, if you go back to like the very last charts, it could be like MSTR's cost basis, which is around 75, 70, I think it's around 72, 75 right now, right? I think IBIT's cost basis is around 80K or 81K. Across all US spot Bitcoin ETFs, it's around 80K, right? 80.4K, I think. And we actually bounced off that ETF cost basis, right? And it does make sense. We actually saw like record outflows from IBIT, which tend to be contrarian indicator in itself, right? And we, by the way, we also like publish our own crypto asset sentiment indicator. That indicator has flashed a contrarian buy signal, right? A technical buying signal on the 21st of November as well, because there's been like broad-based capitulation across all kinds of metrics, including ETF flows, including like altcoin underperform, all kinds of metrics that we track that actually implied like max capitulation.
It was super interesting to see Vanguard now deciding to go into the ETF universe, where in the beginning, when the old CEO was against it, and then Bank of America saying for percent should be a good allocation just when we bought them. So I don't know if this is a coincidence, but I thought it was really interesting to see the price goes down and then after two major news coming out. I don't know what you guys think, but I thought it was worth discussing.
It's probably a funny coincidence, but like at least I can tell from our internal discussions with like these major wirehouses, because we've also been one of those ETFs that have been included at Bitwise. So at least what I know, these discussions have been going on for months, right? If not years, right? So, and it's been like a very long process, but it's actually, yeah, really a funny coincidence that like they greenlighted like yesterday, right?
Probably right that these things have been building up in the background, and I don't know, very, very coincidental, I will say.
Exactly. But Andre, thank you so much. It's been fantastic having you on the show. So much good data. Super glad you joined us today.
Thank you
Really,
so
really
much.
appreciate it.
Yes, really appreciate. Thank you.
Really great to be connected with you recently on the interwebs, Andres. So thanks again for joining. Thank you very much, Maurizio, and good to see you guys.
Thank you both, and thank you guys for watching. And we'll see you next week. Cheers.